Greetings, market rebels, and welcome to this week's macro measure combined with our sector situation video. It's about 2:40 p.m. here on the East Coast. Friday, I think we're on Friday the 25th, if memory serves. Here's the trustee market rebellion disclaimer. Here's our trustee intellectual property rights notice. And then I've got a quick highlighted review of last week's slide. I've been trying to keep this just to one slide. Anyway, the highlights, let's see, get the old laser pointer going. The highlights are, where are we? Well, we thought we were in a relief rally pullback, potentially with a tentative higher low and the uptrends were remaining intact. But we were like a little worried about the fact that we couldn't advance. Seemed like they should have been able to. And then their willingness to remain below the 20 and well below the 200 in the major index ETFs that we chart, so folks can trade them if they like levels we discuss or what have you. Anyway, we also talked about possibly coming out of the somewhat boring holiday week and maybe resuming in terms of volatility, which I think we did. Again, I still think even despite the market having a great week with just a little over an hour remaining, the nimbleness is still shining because the way this market trades is just not easy. A lot of it's just news reactions or anticipation of news, I think. It seems like they got a heads up on certain things, and they've been getting that since, I guess, time immemorial, and they still get it. And you start to see some inexplicable moves, and then you find out why later. Anyway, that's probably why I've got this highlighted right here, right? No end in sight to the fact that news and developments are going to impact the market. No end in sight on that front, but could change with one headline. And so, meaning, right, that unless the headline could be once this is all over, it's all over. Okay, now everything's back to somewhat normal or whatever the case may be. But clearly, excuse me, headlines really helped shift the market on Monday, excuse me, and then they were able to do their best to do what they do, really for the balance of the week with just over an hour remaining. So we did talk about could they muster squeezes and extend the relief rally, maybe even get to the underside of the 200. And we actually also asked, can we just rebuild from there, or should we see a retest of the lows? So that's what we really discussed for the most part last week. This week, I'll flash this slide up there, and then I might just get off of it and make sure I cover it in our travels, and then we will wrap up. But once again, I want to keep the slides so I can mention certain things. The first thing I'm going to mention is T2, because I tend to forget about those types of things, even though I mean to talk about them. So for folks that manage to stay awake for these videos each time they view them, really each week or weekend, I really like to try to sprinkle in something that I come across that's really often not really part of the services. Sometimes it is part of ideas we've generated in the recent history, maybe the last few days or so. But sometimes I just come across things that I really like and try to share them. Anyway, that's what I'll do with T2. But for now, we're going to stop and then reposition everything briefly. Just give me a moment here, and we ought to be able to put this stuff on another screen and get out of this one over here. And where does that leave us? Hopefully that leaves us with a nice chart coming up here. And it's just not shifting for me for some reason. They get the share going again on this. I'll use this chart here and we'll get started. So that's going to be screen 3 and share. And is that giving us the screen 3? Yeah, look, yes, it is. So this is good that we're starting, I think, on spiders. We'll get right into the charts. And the thoughts, as we just recalled from last week, he ended here on, really, I guess it was not Friday, Thursday. I've been saying Friday, but obviously with Good Friday being closed in the market, we were really ended on Thursday. But it was really kind of talking about the higher low possibility here, that you have this big push higher, and you kind of have this somewhat of a pullback, right? And then you have that listless holiday week with low volume that I neglected to mention, and I think last week and wanted to just to say that that can make it hard, but when you're pulling back and you want to be a bull, you're pulling back and the volume is not that spectacular, which it certainly was not. That's a good sign. I think I neglected to mention and wanted to, so I thought I'd share that this week if I did in fact forget. Anyway, what happened was we came in, the so-called higher low looked like it was on shaky ground. We did note last week that the market really looked awful. There really wasn't much positive to say aside from the higher low and aside from the fact that the long-term trend was still up. That was really it. They made it seem as though, right, with the early action, or actually most of the day, things were pretty rough on Monday. It looked like you were really on your way towards that retest scenario that we discussed. But they got some headlines they could work with. I guess later that day, or maybe it was the next morning, I can't recall. But if you drill down and you get yourself into Monday's action, you could see what happened. And that's exactly what we're going to do here. And I was watching this and I said to Ryan, this is we had a conversation and I just said something's really up here because, well, you can't really see it so well. Let me just try to enlarge that for us all and kind of give us some little bit better view on it. Better view. But that afternoon, they really started to lift things up kind of late. And I was thinking to myself, this is really interesting because it was an ugly open. The market was pretty much ugly, except for really the last hour. And I kept thinking, what is going on there? Now, we know that turnaround Tuesdays are a thing. I mean, it's not not for a lack of reason, right? That folks often say turnaround Tuesday. We use it a lot, of course, ourselves, and you do get that. But Monday, that final hour Monday, and this is another reason why it's important to look at that closing action. And at times, that was really the low of the week, right? So if you kind of notice this, and this thing's starting to waft back up, as I've often said, it's hard to understand it at times because you're not privy to the news or what news will be on the way right to your screen in the near future that other people seem to get their hands on. How they do that, I can't really say exactly. I've never been privy to that, but it pretty much happens with regularity and through the years. I just have always seen it. So you're left scratching your head. But that's why I always try to convey to folks that just assume the market's right and then go with it and to the best of your ability and just adjust as best you can. That's the only thing I can really think of unless you find a way to become an insider and you know things before most of the rest of us do. Because the market tends to know things, not always, but the market does tend to know things before we do. And so if you start seeing curious moves, why would you lift and erase most of the selling that happened during that session? Why would you be able to do that in the last hour on what? But they were, and the rest is history, as they say, because we've been up and away ever since. We're almost, as we're recording here, we're almost at the high for the week. I think it's very close to being near the high for the week. So I mean, we're very much just a hair off the high of the week. So if we kind of expand back out again, just to enlarge things, that's what happened. Remember, we said the market looked awful, and that's another way of saying it might have been predisposed to anything that could lift it. We talked about how they, regardless, right, of the EPS game that they play, even though it may be hard for them to spin the future, they're using, right, the skirt. That's what kids used to say back in my day. You're hiding behind your mom's skirt, you come out and fight me, things like that. Well, Wall Street's been hiding behind these supposedly really good earnings numbers and all this kind of stuff. So those are all revised down dramatically. That doesn't matter, right? It's all about the spin they put on it, and it's all about really it's the reason, right? They've got something they can use to justify why stocks are going back up because they like to spin a narrative rather than just say, well, we just push stocks around in ways that make us the most money. And often that means a lot of short-term traders getting chopped up and spit out, right? So it sounds a lot better to say, well, people are buying because these earnings are good. Now, many of you will know that when earnings are not good, they always talk about, well, that's backward looking. But when they're good, it's good. So it's just, it's the nature of the beast. That's the scam they run. And if you had a media that would just really do the job they should in theory, be like, come on, man, you can't push that BS to our viewers. You can't tell me this quarter things are great because earnings are supposedly good. The earnings numbers were revised down significantly, and now you're claiming this is all wonderful and you don't even have really great clarity on the future. Doesn't matter. We know in reality it doesn't matter in the market we deal in, but it would be nice if someone would just call out the BS every now and then. At least for me, I'd appreciate just so people can say, yeah, that there's reality and then there's what they're spinning, and we just have to go with the spin, but we know there's a whole different story, really. Anyway, that scenario we talked about where the gang works things back. I think that's the odds-on scenario at this point. So we got a question yesterday, at some point in one of our morning webinars about, do I think this rally could have legs? And I said I do, right? I'm not convinced that the worst is behind us. I think too many people are jumping the gun on that if they think that the worst is behind us. But maybe they're right. I just don't see it. And I don't want to contradict myself and say, well, wait a minute, maybe these players know that. Maybe they do, and that's true. I'm not saying not to trade it. I would definitely go with the flow, especially right as a short-term traders. It's just that for me, I'm not convinced, and I'm not even convinced on the charts. Now, people have talked about this Zweig breadth thrust, and you can look into that. It's a big talk on technical analysis Twitter, formerly Twitter, excuse me. No denying that, Martin Zweig is a pretty big figure in technical analysis history and all that kind of stuff, and that his bread thrusts are meaningful. I think it has a very good track record. So I'm not discounting that at all. I'm just saying that it's maybe not as easy as just buy, buy, buy right now, because usually, again, when things get really ballyhooed, kind of like the death cross was getting ballyhooed last week, and now you can see what's happening. And I think I did note that in some webinars, or maybe even this video that we do each week, that when you get the death cross, it's often a little bit late in the short run. There's almost like a counter move to that. It doesn't mean the death cross won't matter more in the future, right? Where you maybe roll over again, and it's like, oh wow, well, the death cross was right. But a lot of times, by the time the death cross becomes popularized, they find a way to goose things back up. And here's the death cross right there. Okay, and initially, right, 50 drops below the 200 in purple. Gold is the 50. Looks pretty bad. Everyone starts talking about the death cross. What do they do? And this is what I was alluding to. And I just don't have numbers to prove it, but that's my recollection that this happens fairly frequently, I would say. But my number one odds on where are we now, to answer that big question of where are we now, which is really the most important one, because I think it tells you how to proceed. And right now, you're still in this volatility maelstrom potentially that's news driven. You just don't know what's next and when. And so you have to still be super disciplined. You still have to ratchet that discipline up, and your position management should be very aggressive. So if you normally like to say, oh, I let things run for, let's just pull something simple. I like to let a stock run 3% before I do anything. Well, you might only let a stock run 1 or 1.5%. Excuse me. I like to roll. When I roll, I like to stay within the monies. Well, maybe you need to think about rolling at the monies. Well, I like to roll, when I do roll, I like to roll out and not just up. Well, is it really worth it since you're going to be putting more money up for longer dated premium? Right. So I think what I mean by aggressive is really tight, close to the vest, right? And just don't be afraid to adjust and adjust and adjust and adjust, because my experience is when you are a position trader, that's what you spend most of your time doing, contemplating what adjustments, if any, you should make, when you should make them, to what degree you should make them, how you should make them. And that can even be a hybrid decision where you say, I'll trim some, roll some, or I'll close them all, whatever the case may be, and then reevaluate and maybe get back in. But it's hard to hold overnight when there's news affecting things. Even within the cocktail hour webinar that we held at 1 p.m. Eastern, there was news that developed that started to bring the market back down away from the highs for the day week, right? So I don't think we've been back there since. Obviously, the news is being sort of laughed off to an extent, but you still have your declining short-term SMAs here in the spiders, and you've got this big resistance line I'm going to make blue. That'll dovetail almost perfectly with the 200 should we get up there. The 50's in the way. That could also matter. I came across several stocks where I put the 50 in as a target to the upside for certain ideas, and it stopped in its tracks, and the stock reversed back down. So I'm not a big fan of simple moving averages. I say it quite often, but the fact that they're widely followed, I can't avoid the fact that they seem to matter to a lot of market participants. And after all, that's what we're really trying to look at, where prices react to and why, or where they may react to and why. So my natural inclination is that news neutral assumption is you keep going, because things have improved significantly. You have had a Zweig breadth thrust, and this higher low to me tells me that they want to try to take things up a little bit more. I still think I'm going to be a super disciplined manager, as I already noted, and not going to get crazy at this point. I wouldn't doubt people, as I said, I think last week or the week before, maybe even weeks before that, when the market's down as much as it was, as quickly as it was, there's nothing wrong with dollar cost averaging for the long haul. Maybe that's 20% of what you were waiting to do, a quarter, I don't know, maybe even more, it depends. But I just don't think this is over. I think with the VIX in the mid 20s, it's been battered. But mid 20s, the 24, 25 levels big. If we can't hold that, yeah, it's probably on its way down to like probably 18 to 20 in the VIX, which we'll get to. But right as of right now, I would say the bulls have seized control. They're ignoring a lot of things, as they often do. And if news does not get in the way, I think that they managed to get this a little bit higher. There's certainly a gap close that could happen here at 554.81. You've got your 50 coming in, which is currently 562.08. You've got these fibs that we've talked about several times between 563 and 565, and then your 200 is up here near 573. So, and as is our resistance line. So a lot of these things are there, and I think the thing I don't want to neglect to mention is this looks like a breakout, right? Because this is really the highest level you've reached since you put in the lowest low. And so with the higher low here, you've got this high over here, but that then led to this pullback. So you're exceeding that. So what you have to be careful and cognizant of, especially in such a herky-jerky market like this one, is the false breakout, where this scenario that I just laid out that I think is odds on, they use that against people by pulling off a rug pull. And if you wonder, well, what could happen? This is what I do, and I've shared this many times. And I know that lines are out and other things are in terms of the technical analysis, trends and fads. But if you leave me alone on a desert island, I can only have a few indicators. Line drawing is definitely going to be one of them. Though I probably wouldn't even need it, because on my mind's eye can do what it needs to do. But you get the idea. Anyway, you could really be right back below this key resistance line I just highlighted in blue, and the short-term support line that I just highlighted in blue. You could be right below that all over again quickly. And so if that happens, right, then it's sort of like, well, that rally really failed to fire. You have sort of like a mini double top that happens at a level, which is the 50% retracement, which is near this low and this low. So in other words, the structural resistance got in your way and you couldn't really get through there. And that would not be a good sign. So that's why we always say, if a stock can't hold a trigger level, either hedge or don't stay in it, exit, right? So there's nothing wrong with that, because again, you can always get back in. So that's what I would tell you, is you just be on guard for that. Hopefully we won't have the false breakout scenario. But you can't come in think things are wonderful Monday when we're up, let's say we're going to go up like, I don't know, 0.5%, everything's looking good. And then suddenly a news story hits and you start rolling over. That's the big fear, right? That they have a really much, you have a failure to fire where you should have further, and boom, you're in trouble. But that would be my scenario. And the downside, as of right now, I'm just trying to pull up a chart off screen, so I might be able to spout off about a few things, but something's in the way here. So we're not really that overbought is what I wanted to get to. You're kind of approaching overbought on some intraday charts because this has been a monster move off the lows, really solid move. It's been somewhat unrelenting, but it's not that bad, right? I don't think that's really the big worry that you're super short term oversold. I'm sorry, overbought, excuse me. But that would be my discussion there. On the downside, you've already got the 10 and the 15 rounding up. The 20 there in light blue has yet to do that. Those could start lifting up, crossing. But I think your big level to the downside right now would be right where the 10 and 20 are grouping themselves at 534. So if that really gets lost, then I start looking at some of your lower, your levels lower beyond that. And I think clearly that 524 level that we've got there in white, that's a big, that would be your next big level down if the, let's say the 533. So another 2% basically down. And then you could just pick your lows and your fibs and other things from that point on. The fibs, the next fib really down from where that 533 is the 511-ish, 512 area that we talked about way back when as a possible level to fall to ultimately. That would be one of our key drop off points, and they just blew right through there as if it didn't even exist, which is not normally a good sign. Anyway, that's the coverage on the spiders. And I just don't think, I think this week is clearly encouraging. I don't see how you can say it isn't. I just feel like I need to see more. It doesn't mean I wouldn't be a bull on short-term ideas. I certainly would. There's no qualms. I mean, it's been almost all bullish since Monday's low. Every UOA Pro idea has almost exclusively been bullish. So I wouldn't put those in there if I didn't think people should take the trades. But anyway, hopefully a lot of them have worked out. Well, I don't know. I don't know if we have all the reports yet, but we'll get those next week from folks. But anyway, I don't think it's over. I don't think what I've seen so far, it says it's over in terms of the news. The street might know it's over because they may know what Trump and those folks are saying behind the scenes that we don't know. I just don't feel as though that it's been that impressive. In some other ways, the Zweig bread thrust is certainly impressive and other factors are impressive, but and there has been recovery, but I just don't see where everything's just gotten so wonderful yet. I do think it's on its way to getting better. I just don't think it's wonderful yet. I think this XLY that's highlighted here, that looks nice and promising. And XLP, that rotation seems to be happening where that's being sold, that could drop further. This is pulling out near a key level and it could start lifting even more. So I think that's encouraging. But of course, with the logistical disruptions that the tariff situation has caused, XTN hasn't really been able to get out of its own way again. And that sort of makes sense. XLE, which was doing really well for a while, that's sort of cooled off and chilled, right? They did get a nice pop in the financials, but that was earlier in the week, and they haven't been able to do much as the market has continued to move higher. So there's some key sectors there that I like to look at that are not really, I would say, not that impressive. They're not completely unimpressive, but they're not that impressive. The other sort of defensives are XLV, XLRE. They're not doing all that much. That's fine. XLU is not doing all that much. That's fine. XLI and XLB have both had good weeks, but they're stalling out here. That's okay. I could see some profit taking after the jam job that we saw starting, late on Monday as we showed. But the important things are these former leaders are starting to really jump up. Okay, so that to me is a good sign that XLK and XLC are doing it. So you just got to be on guard for false breakouts from them as well, just like we saw in the SPY. That's the only real problem I see there. Otherwise, I think they're having nice weeks, and that's a very good sign because if they start to get that stuff moving, then that can really, those some of the weights, of course, are really important. We should at least glance at SMH as we discussed that as well, because SMH and poster boy for the stock market, Nvidia, have also started to look much better. So again, I think it's slowly healing. There's nothing extraordinary here. It's good. There's nothing super overbought. You're getting a little bit towards that on some of your intraday views, but it's not atrocious yet. So the way this thing is, excuse me, it wouldn't be stunning to see this trade to the 50 and then up. So I think that's a part of my calculus, if you will, is that these look pretty good to try to at least trade up a little bit more, the way the charts look to me, and they're not overbought. Intraday, like I said, maybe a little bit or getting there, but not really on a daily basis. There's plenty of room there. And we had an idea, actually. I don't remember. I think it was like a 104 trigger or something like that in Nvidia, because some paper came in. It was really languishing, and then it finally really burst and is putting together a good finish to the week. So I think that's very encouraging. Like I said, I think a lot of people were caught probably offsides, flat-footed, ill-positioned, whatever you want to call it. The big pro money and different factions, the CTA crowd, the usual suspects, hedge funds, the whole works. And when you have that much of a bombed out market, and then they're given the tailor-made cover stories that they can move stocks up on, in that are probably predisposed to do that for those reasons because of the poor positioning. This is pretty predictable from that perspective. Not that it was predictable easy and from the charts or whatever, but when you just know that those conditions often do produce this kind of a relief rally, and they have, I think, done it yet again. So those to me are looking good, although I just still would say these are not out of the woods, even though they are looking better. And I've been through this many times, and people get all excited, and I wouldn't be surprised if this thing traded above the 200-day, and then I couldn't hold it, and it rolls back over. If everything gets fixed and it gets back above the 200-day, and we start really holding above there, that'll be great. Of course, SMH doing that, other things doing that, that would all be great. No argument whatsoever. I just don't think you could say that yet. I don't think there's been enough work done quite yet to say it's all over on the charts. And I don't think really that you could say it's all over just in a common sense observational perspective as a trader, or even just as an observer, because I I with what we know, I just don't see how you can say that. I think there's still a lot of uncertainty out there. And the other thing I would say is that we got to talk about T2 before I forget. But this final line I'm jumping down to, what if the tariffs and trade that really everyone seems to be focused on, what if that really isn't the problem? What if the problem really is that things were not really all that wonderful before the tariff and trade kicked in? What if rates are being so sticky, the Fed is not where they need to be, and that's really causing problems, right, for consumers and other borrowers? What if, right, the economic data and the confidence data and all the other stuff isn't all that great? Can you really rule out a rough 6 month period, aka a real recession? Especially, right, if you buy into the argument that a lot of things were goosed and a lot of things were set up to be basically ticking time bombs for the incoming administration. So some people believe that. So it all depends, I guess, on what you're willing to believe and your perspective. But I would just say that I wouldn't rule that out. I think there's enough bad stuff that's developed off camera or under the cloak of the tariff trade situation that's discussed virtually nonstop. I think there's stuff there. I think the consumer and so on and so forth there's definitely real problems that could develop. And I think that the Fed is behind at this point because of what I'm reading, what I'm seeing in terms of some of these numbers. To me, it's looking rough, and EPS have come down, and to act like, oh, that's not a problem, we go right back up towards the highest highs. I don't think that makes any sense to me from a common sense, news I know, information I know perspective. But I will tell you that in my career, when there have been bear markets, they've been able to get it incredibly close to the former all-time highs, despite everything. A lot of the underpinnings for what, in other words, a lot of the underpinnings that produced this all-time high may have been already been washed out, and yet they'll move it within, a stone's throw of this level. And if you're sitting there fighting it, wondering how in the hell can this even happen, this pillar of what they were building this rally on is gone, this one's gone, they're all knocked out, right? How in the world is that's where that's the danger of using logic and common sense in the stock market. You really could get yourself in big trouble and miss out on a lot of opportunities. And so I would say you really don't want to be in that position. If you find it hard not to be, I get it. But I'm telling you from my own experience that I would not look at it that way. I would just trade it, because that's how we make the money in the short run. It doesn't really matter. In fact, you should almost welcome it, if you ask me, because you'd get a real scamper that you could really get some good runs like we saw this week. Here's a couple names that come off the top of my head that we had in UOA. Coin, it triggered, I think, on this day, closes at 107 after triggering, traded as high as 121. I'm sorry, I'm saying coin when it's net. Another one was coin, though. As a matter, that's why I meant it. I kind of got crisscrossed there. But this one was another one that triggered and ran. And you could see, this thing was at 175. It's traded up to 211. I feel like a jackass for putting in a $20 vertical, right? Because I like to put in wider verticals on stocks like that because I know what they're capable of. But when you get these kind of monster moves, you almost feel like, wow, that was what a mistake. I should have put in a $30 or $40 vertical. But again, folks can always riff on their own, do what they want. Even something like this one that we had this week, SMMT. Look at this. And again, this is why you engage in very aggressive position management when a stock makes a move from the mid or low 20s up into the mid to high 30s. Right? You don't play games. If you got in, I don't remember where we got in exactly, but it was, I think, earlier this week at some point. It triggered, it ran, and then started gapping. You roll up like a champ, right? Like when you know something's made an extraordinary move based on the way it normally trades, or your Bollinger Bands or whatever you like. Here's a Bollinger Band to give you perspective. That's probably set at 2. It is. So that just tells you how stretched beyond a 2 standard deviation move from the 100 SMA this thing was. And so that's exactly why you have to be an over roller. This is what I mean about being aggressive. If you want to stay in and think there's still this wonderful thing that's going to happen, that's fine. But just get yourself into an out of the money call rather than an in the money. That way you keep most of the money you made all the way up. And if they do rug pull you, you don't give it all back. Anyway, if we kind of come into news neutral, we come into the market, this thing just won't cooperate with me. Anyway, if we come in and we're kind of news neutral over the weekend and everything seems okay, and they say, well, we're a little short term overbought, and they start working stocks back down a little bit for a day and a half or something like that, that would be great in T2 if you ask me, because you could see how this thing's been consolidating, but it held up really well. I mean, it recovered really much more strongly and quickly than the market itself did, and a lot more. In fact, it's making new highs here. So I'm bringing this one up because I think the chart looks really good on this one. And I think if you get that pullback towards maybe like a 220, a 219, I've got lines in there. You can see if you were to get back to maybe towards these former highs that are near that 219-ish level, 220, this one's a little bit through there, but 219. Let's just throw the 220 number out there as a ballpark. Remember, fat magic marker, not mechanical pencil. Anyway, get back there and this thing holds and the market starts doing it again. I would definitely keep your eye on this one for possible move, because if you look at this thing, it's got a lot of characteristics that I've seen that have launched really nice moves in the past. And so this has got, you probably can see the inverted head and shoulders that's got in there. Look at the strength it's got right now compared to a lot of stocks. Look at the fact that it's leaving this consolidation behind on the weekly chart, which is, in my mind, a heftier chart than the daily, the way I like to look at charting. So decide for yourself. There may be a nice little pre-EPS run that could develop there, right? So there'll be about I don't know, 2.5 weeks, but that lead into the earnings. So it could, excuse me, it could put a nice run together. I don't want to belabor that. I just didn't want to forget it since we got on it. Okay, so let me see where we are in terms of some of our bullets, and I might bring this over and then go back. So where are we? So yeah, we're doing that. We talked T2. We talk about the fueled squeeze, buying begets buying. Yeah, this was all right. So it was awful predisposed, got the tonic it needed in terms of the EPS stories and the Trump news, or whatever you want to call it. I'm still sticking with in subtle and not so subtle ways. And I don't even think I'm going to review the XAU, DXYT, and X and VIX, maybe just the VIX. All I'm going to say is that I still think they're telling you it's not normal. This Zeig bread thrust we talked about, it has a great track record. I'm just saying, for me, if someone asks me if I'm convinced it's over, I'm saying no. And I'm just going to say, until we start really taking out new highs, for me, it's not over, right? I think you have to really know that it's over. You have to make new highs and then hold above there. You can't just have a nominal new high where they take things up a little bit through there and then reverse it back down. That gets you, on the bigger picture charts, a double top that's pretty ugly. Anyway, so let's see, where am I on things? Let me do. All right, we are back to recording. I had to pause it there briefly. But we already talked about that. Yep, I mean, still talked about this. We talked about the masterful work they did on Monday. They flipped the switch. They got all those offsides players in trouble. Buying begets buying, and here we are. If you want to know, right, this has been so persistent virtually every day. If you want to look at that a different way, you can just say, where are the sellers? And it's not. It's just that they brought so many buyers in who've been waiting probably to buy, and a lot of sellers seemed like they were done the week before the holiday week because it was so light last week, as we talked about. So again, long-term trend still is intact. I think the Fed's behind at this point, because I think, from what I'm seeing, I think there's some rough stuff heading our way in terms of future economic reports and things happening with consumers and so on and so forth. And the Fed's just being stubborn at this point. And oh well, we'll see. We'll see what happens with that. Anyway, I do think the underside test of the 200 is probably odds on. Probably expect that to happen. Except from, it is news neutral. That abbreviation is there for a reason. The maelstrom makes it difficult to forecast. Again, nimbleness is the key, right? Just doing exactly what I said in SMMT. You don't play games. You don't say, well, I want to milk this more. You just don't do that. The thought just doesn't even stay in your mind for less than a fleeting fraction of a second, because this market is too treacherous at times due to news. And so a lot of times the big burst that you initially see in the morning that leads to a really strong, let's say, range expansion where you get a large range, a large move, a lot of times, if you don't act when that's happening, it never gets back there for the day. You're done. And you might even have to wait days. So why keep risk on, right? Why keep risk on for longer than you have to, and especially in a market like this? Things could shift quickly with headlines the way things are right now. I still think we are not out of the woods, so I still think you could get back to that. Oh no, it gets crazy all over again. People don't know what Trump is up to next. He's got folks guessing about what's happening next, and that doesn't even factor in, right, other leaders of other countries. So we don't know what they're up to as well. So it depends on the path things take, but it could turn into something, and it might not even be Trump for a change. So and again, I already talked about what if tariffs and trade aren't the really big issue. So we covered all that. Let's take a quick look at the breadth, and then we can take a look at a few other things. I'll look at the VIX, but I just want to show the brief breadth chart that we brief look at breadth, and it's definitely a good thing. I'm kind of expanding it out to show you more history this time, just to put things in perspective. So everybody's really excited about the Zweig, and I'm all kudos to Martin. I read his book, and I liked his book, and at the time I read it, and he clearly is a guy that is well known and and pioneered some stuff in charting. And I think his track record on that is really good. So I don't doubt it. I just feel like this is not showing me enough that we have really done enough. And in fact, this McClellan oscillator burst, to me, having observed this stuff for so long, this might even be too good in a sense, right? Where if you go back in time and you look at when you get this kind of a McClellan oscillator reading, notice that comes just prior, the best of it comes just prior to the top, and then you sort of do nothing before correcting for a while, right? And so it can often be that you ran a little too far and you need a breather, or you pull back after. So here's one where you get up there, there's a breather that happens. Let's go to the highest one here. You get up there, not a lot of advancement from that point on. On this one, it occurs literally I think on the day where you top out and correct. Over here, this one's probably pretty good, and that's probably because it's following more of a corrective phase with a higher low. I don't see anything else that's sort of as high here, but this is quite high. And so if you stick to the quite high ones, it might mean that they got a little bit over their skis in the short run. Let's see how this one was. This one here is actually really good. Well, you pause for about a week. You might not be able to see that on your screen, but I can tell you that you pause for about a week. And then this one, again, you pause for probably over a week, or you didn't really advance. And here you pause for a week. So that's what I'm getting at. It's not as if it's not good that happened. It's just that you often do get pauses for some time when you have such a surge, and you get pullbacks. So it doesn't mean it's over. It's over. It just means that we might not get that challenge that I'm thinking is odds on if you look at it from the breadth perspective. So that's that. Now, when it comes to the VIX, let's not neglect to cover that. And you'll see that a lot of folks will say, yeah, I don't think Wayne's moved that line in forever. And that's because I haven't. I tend to leave these on here because these are key levels for me that in terms of if you even want to call it support and resistance. And so right now, this mid-20s area to me is a big deal. When you get above there, that's when I start entertaining that something really, really worrisome could happen, right? That it doesn't happen every time, but that's a marker for me to say, okay, this is starting to get really like real. And then if I think it's supported by, let's say, news or research, then I take it more seriously personally. As many of you know, because of all the UA we had and other things, I was playing the VIX to the upside, and I didn't get my last little bit off, but I can't complain because it did put a nice move together for me. Anyway, yeah, so the next level here, if this cracks and we do get that 200, I do think you're going to get back down to 20-ish or maybe a little below there. That would be your next big stop in my mind. And that could happen, no question about it. But that's the thing, people will start going back to sleep again. And that's why I'm saying that maybe, just maybe, it's the tariff isn't the whole thing. Maybe the tariff and trade is really not the whole thing. I don't want to belabor these because I know everybody hates the long videos, or I should say most people hate the long videos, but I don't really see much in terms of, you can pick the levels out if you like the charts and some of my lines that I use. You're welcome, of course, to go ahead and do that yourself, but I don't see anything really radically different about what's happening in spiders and Qs, right? So that I could say, oh, well, here's the real here's the real difference. I mean, we already looked at XLK and XLC. You're lagging a little bit here in the diamonds. I will say that, but you're finally above the 20 with today's closing action, which is a little more convincing than Thursday's. And you're right at, I think, a resistance line could be drawn here. So yeah, the next line up is here. There's a fib near 408. The line is probably near about 410. I'm going to call that a level. So if you want to know where that goes next, that would be 410 to the upside. Your 50 would be my next level up, and that almost dovetails with your next fib on the way back up as well. And that's not too far from the 200 there in purple. So really a lot of this, of course, is the same. Really a lot is the same. So there's not much for me to really add. The IWM is the laggard as usual. Again, kind of the canary in the coal mine when it comes to, is the economy really, really doing better? And is the recovery or performance of the economy really branching out? And I would say, by judging this, no, to me, like if you want to interpolate a little bit, it's not that great. So this is still right. These levels are still your big levels, though. I mean, clearly, I would just say 200, right? 200 really is your big level, and that's going to be up about 3% or so from here. So right around 200, 201, and then you start looking at these other SMAs and so on and so forth. And the breakdown level, because it hesitated here, that would be about, I'm going to say ballpark it at 215 right now, just to put a number on it. But the 20, now that we're above it, I would start using that as the real key area. And probably, if you'll know, right, if it's real, if we just start sliding a little bit and there's no real news, you still have to take it seriously as if there could be news and just trade it. But I wouldn't, without really damning news, the trade, just the whole trade thing blew up or so on and so forth. It's over. There's no trade deals anywhere, whatever the case may be. You're probably looking at um, these things holding up for now. I think it's going to take the news cycle re-emerging for these things to just slide back down at this point. Something's going to have to really create that rollover should it occur. So overall, it would be nice if this, we've already seen the bottom. There's a chance it's obviously the bottom. This week, bread thrust is a good thing that's come along this week, but I'm still holding out concerns, and I'm still unconvinced that it's completely over. Although I think you're starting to see something you can build on, and if we have another good week, and especially if we get above and hold above the 200 on a lot of these things, and we're convinced it's got a decent shot to stay there, that would really start to cement that thought process for me. It would start making me feel better. But I think that's a long ways off in terms of what you're asking for. And in 1 week to really get above there and prove it can hold, that's not easy. But it could happen, right? The way we saw some movement during this volatility storm to the upside, it could happen because you've got, if the right news comes out, that could happen, is what I'm getting at. So on that note, I think I'm going to wrap it up. Again, this is all stream of consciousness with little preparation. For that, I'm sorry. I wish I could do this. This would actually be my favorite thing to do all week, would be to spend a lot of time working on this and producing a series of videos that focus on this stuff, but really more targeted at specific things. And then if you're really a glutton, you could watch them all on 2X and hopefully get a lot of important information from them, even some news items and things like that. But it's just not in the cards right now for a variety of reasons. And hopefully it will be. Hopefully I'll be able to return to those days where I had more prep time and could do that, but it's just not there for me right now. So everyone, I wish you all a great weekend and a great week ahead. I do hope something I share with you helps you out in this upcoming week or some week in the future. I want everyone to have a great weekend. This should go out pretty soon, so hopefully you can watch it and get that taken care of, and then have a great weekend and a safe weekend. Thanks for tuning in.